We like where we are. I mean, the labor backdrop remains incredibly tight. It's growing incrementally tighter. That means wage pressures will continue to build, and of course, that's the juice from a consumption perspective. So when we think about 2020. It's really easy to make the case that it's going to be another pretty rock solid year from a consumer spending perspective. Sort of obviously all thanks in part to tight labor markets.
So if we have a tight labor market, you think it's going to be a strong year for consumer spending. Do you think we're going to see stronger growth than 2.3% for the American economy?
No, I mean, I think that's probably a hurdle that's probably a bit too high. But nevertheless, you're going to be right around 2% growth. I think if you just back into it really with very simple math, if you're looking for about 2.5% consumption growth, which we roughly are, that means your starting point from a growth perspective, if the consumer's 70% of output, is about 1.75%. So that's sort of like your floor in a lot of ways, or at a minimum, your starting point in a lot of ways for the conversation. I think it's going to be really easy to get to roughly 2% growth over the course of the year.
What are your expectations for the jobs report out here today?
Yeah, so we're looking for 150,000 jobs. I think there's probably some expectations that have probably been built up on the back of that ADP report, which was, really just a blowout. We would temper expectations in that regard. So for one, ADP has actually been running soft relative to private payrolls. And so we just think there was a little bit of a catch-up thing going on. But I think more practically speaking, again, when we think about sort of even not just this year, but even years to come, I think what we have to recognize is that we pulled so many people from the sidelines. I mean, there's a sort of an exhaustion going on in that regard. So we're only going to be able to pull so many more from the sidelines. That means that job growth is probably going to wind up slowing down. Now, again, you're speaking to someone who actually has a constructive view on the backdrop. So I wouldn't fear a slowing in job growth. I think critically what you have to know is where is it relative to break even, right? Like at what point does the unemployment rate continue to experience downward pressure? Our view is that break even is about 100,000 jobs. So in other words, anything north of 100,000 jobs is still a really good outcome. And I think there needs to be some reorientation in terms of the thinking on that.
That's a very interesting point and way to look at that. When we think about growth, we're talking an awful lot about the coronavirus, both here and overseas. It seems relatively, I don't know if contained is the right word, but in the United States, we have not seen anything near an outbreak, though we do have some infected persons here.
Right.
However, a number of firms are saying, look, this is going to be worse than SARS for China economically. What do you think here? Yeah,
so what's interesting about the United States is, given a lot of what we were just talking about, how things are, we're in this feel-good environment. Bloomberg has a weekly consumer confidence number that comes out. It came out yesterday. This was through the reporting period, I think was through like February 2nd, so just a few days ago. The confidence data, it fell like by like less than a point. I think that really just drives home sort of, where the consumer's head is at on this. So, and by the way, if you look at Google Trends, just to get a sense for searches on coronavirus, the peak was also a week ago. So in other words, and from that point to today, it's actually fallen. It searches on coronavirus. So in other words, it's really easy, very reasonable to make the claim that you may have seen the worst from a consumer confidence perspective already, and it was only worth less than a point.
And do you mean that from the U.S. perspective?
From the U.S.
or
perspective,
globally?
no, from a U.S. perspective. Obviously, from a global perspective, there could be disruptions to the supply chain. We've just experienced this, right? I mean, with trade. So we came through that relatively unscathed. There was some pressure in the manufacturing space, obviously. And look, we've been telling people straight through, temper expectations with regard to manufacturing. There's still a lot of pressures, even just emanating out of the trade front. So we think that this will be sort of yet another factor that will keep a lid on manufacturing activity overall.